Hello, hello. Is this thing working? Testing. 1, 2, 3. Hello, hello. Hello. Welcome now, Stock Trades. Hope everyone's doing well. Thank you again for joining. Again, this video is going to have a lot of information in it, like always. We always strive to make one of the most boring videos ever. We don't have any beautiful editing skills. I mean, I do. I just don't have the time for it. But I'm very happy for you guys to join me on one of the most driest videos in finance, I might say. I always try to make it somewhat entertaining but most importantly, informative. Because at the end of these videos, I always want you to walk out with something new, right? Always walking out, better than what you came in. So there's a lot of things on the docket. I think this has been covered a lot, but there's some people that they just get their Clover information from the videos. So we're going to go over it. Very happy to say there's no reverse stock split, right? I believe there was a meeting like yesterday or something, which was canceled. No meeting, right? It was canceled. And I'm going to show you kind of the 8K form, and we'll go ahead and do that. What are your plans for the weekend? Woo, it's going to be fun. It's going to be fun. So tomorrow I got dinner with my adopted father and the family. I'm about to get ready for Washington, D.C. I'm going to be gone for about a week to D.C. I'm going to present at Howard University in the Congress of Neurological Surgeons, and I'm about to go to the White House too. Because I got Tucson's 40 under 40, I got some backstage passes to the White House. So I'm going to see the Biden administration. So it's going to be really cool. I'm going to go there, and yeah, it's going to be really fun. I'm going to try some really nice restaurants in DC area, and and gym. I'm going to go to the gym. In fact, I'm going to go to the gym today too. I love swimming. But yeah, how about yourself? What's your plan? Comment down, you guys, what your plan is. And yeah, we'll get started here. So let's go ahead and start with the video. So like I promised, we're going to go ahead and, at least cover it on the channel, because we're not going to basically skim over it. So we're just going to read you this so we could just say, we checked market, a little checkbox here. So as previously disclosed, on July 31st of 2023, Clover Health received a notice from the NASDAQ notifying the company that it had regained compliance with the NASDAQ minimum bid price requirements, right? The company no longer intends to pursue a reverse stock split, and the authorized share reduction at this time, as each is more fully described in the company's definitive proxy statement, is no longer needed, and essentially they are canceling the meeting for August 30th at 11 a.m. Eastern, okay? So that's actually good. Now let's go ahead and just regroup here really quickly and just kind of talk, here and really get to the bottom of this, right? So what this tells me is that this company is it's a bullish move, right? It's like, oh, you know what? We're going to cancel it. We don't think it's going to drop. So we're going to go ahead and cancel the meeting. And it's a bullish stance, right? It's good. So there it is. And it's really funny because, man, did those hedge funds and the media, they really tried to drill Clover down. I mean, whoever survived this long, congratulations, you are a freaking champion. Like, you should pat yourself on the back. You are a fucking beast. You are a fucking beast. All right, if you survived a 90% fall like that, you are a beast. You are a lion. Okay, you are the shit. Joe Rogan has nothing on you. You hear me? Okay. All right. So let's go ahead and let's get to the next slide here. So very exciting news. I just published a book. It's called The Intelligent Investor for the Modern Reader, based off of the master Benjamin Graham and the Oracle of Omaha, Warren Buffett. I am the author, of course. It's still out of stock. It's going to be in stock soon on Amazon, Barnes and Noble, et cetera, et cetera. There's a hardcover and paperback. I'm just letting you know right now. I will let you know when I get a copy to let you know if it's good or not. I need to get a copy first. So don't do anything, right? Let me take advantage. But if you haven't realized, this was published on August 30th. What's August 30th, if you might say? Well, it was Warren Buffett's 93rd birthday. So I sent him a copy, or going to, and I want to thank the Berkshire Hathaway team for reaching out to me, and I appreciate the opportunity to be able to pay tribute and homage to the person that changed my life, both Benjamin Graham and Warren Buffett. All right, so there's that, and just to kind of give you a little bit, how it looks like. I designed this. It's really exciting, right? And just really quick here, just a table of contents of what's inside here. We got the preface. We got the insights from the Oracle of Omaha. So it's a little bit insight summarizing his findings, and just the chapters, some really nice ones in investment versus speculation, investor and inflation, really great for now. All these are amazing, right? But just a couple ones that I like. A century of stock market history. That's really good. It really gets you kind of understanding of what happens in the market dynamics. Enterprise investor, negative approaches, the positive approaches. This is a really good chapter. The investor and market fluctuations. There's a contract in here, which you may have seen me talk about. It's a contract to yourself. To stay with your convictions. Security analysis, that's a really good one. Honestly, all of them are good. A comparison of 8 pairs of companies, that's a really good one too, to get you some experience. And, of course, the margin of safety. So that's it there. So, all right, so we talked about that. Now let's go ahead and let's talk about this graph here. So I want you guys, ladies and gentlemen, I want to break this graph down for you. Okay, we're going to start from the top. Okay, this solid black line is the SPX. What's the SPX? It's the S&P 500. Okay, and you can see the prices here for the S&P 500. Then we have another graph. Okay, this graph is called the corporate insider buy and sell ratio. So when the number is high, it means corporate insiders are buying. When the number is low, it means that corporate insiders are selling. Okay. So there's this graph. Okay. Then there's another graph here called small trader put buying. These are small retail investors. And again, to get this data is, there's a lot of, this data to get is really expensive. And essentially, this data is parcellated from small retail investors. Okay. And it's interesting because, what's a put? When a small trader buys a put, it means that they're bearish for the stock market. It means that they are thinking the stock is going to go down. Okay. And you see these green lines and red lines. The green lines means you want to buy whenever it passes. It's a great time to buy. The red line is, you know what, maybe we should reconsider. It's interesting because every time when retail investors are really bearish, and they're not doing any buying, we usually see a stock market depression here, right? This was the coronavirus 2020 dip. Small traders and retail investors were like, I'm not buying that. What were corporate insiders doing? They were buying. So I wanted to just give you an example. Pretend that you basically were part of the Al Stock Trades community and you had this data and you understood the world was shutting down. Okay, let's go ahead and kind of bring you up here so we can kind of see each other face to face here. The world was shutting down. Okay, people were losing their jobs. And the stock market on CNBC, they're saying it's a murder show. And they were just screaming, just panicking. But then you have data because you are a data-driven person, right? I didn't get the message you were live. Yeah, that's kind of weird. Actually, you know what? I don't think I pinned the stock terminal. I'm really sorry. So you get this data. YouTube usually notifies me. Oh, I see. Yeah, you know what? Screw YouTube, right? I mean, they don't want you to learn this information. I don't know. YouTube, right? So interestingly, and I really want us to just look at this. We are data-driven people. So you're telling me that when everyone was basically selling, look what corporate insiders were doing. They were buying in 2020 when the crash happened. This is corporate insider ratio. They were buying the dip. What were retail investors doing? They were buying puts. They're buying puts at an extreme level. And then guess what happened? They got destroyed with their puts. Okay. And then all of a sudden, the market became like a fusion frenzy. Everything was going up. Everything's going to the moon, bro. 10 stocks to buy, bro. Tattooed chef, bro. Come on, bro. Right? And what were corporate insiders doing? They were actually selling. You see when it's below, they were selling. And then what were retail investors doing? They weren't buying puts. They were buying calls. They're like, yeah, it's going to go to the moon, bro. It's going to go to the moon, man. We're going to buy calls. And then what happened? Stock market started to drop. Corporate insiders started to buy more. And then guess what happens? Small traders were like, nah, it's dropping. Let's buy some more puts, bro. And guess what? Market dipped a little bit. And then now we're back to being puts. Again, psychology, human psychology is always the same. Okay? Okay. How do I explain this to you? And this actually goes into the book that I just published on Amazon, Barnes and Noble, and a couple of universities that are going to buy the book. So people that are in business school, they'll be able to have this book and check it out at their library. Okay. So, and then in about one more year, there's going to be an MD in the book title. I just didn't want to put it now because I have not earned that yet. I'm just an MD candidate. I got one more year, right? So I just want to, again, I'm sorry these videos are long, right? But again, these videos, I want them to be educational, almost like a podcast, right? And I want to also guests can stream this on their own destination. What the hell does that mean? Let me go ahead and copy this, okay? And I just want to open this up to the community because again, I want this to be a channel where everyone can talk, right? So this is a link. I recommend clicking it, right? And this link will help you get on the live so we can talk, right? So we can have a solid discussion. Let's have a freaking discussion, right? I mean, life is short. A life unexamined is not a life worth living. And let's actually come together and have a good talk, okay? So I want us to go ahead and I just want to basically point this out, okay? Everyone thinks we live in a transactional economic form that is logical and reasonable. No, that's not right. We are illogical creatures. The buys and sells that you see within the stock market is made by a brain, and the brain is emotional, okay? But here's the beautiful part is you can train your brain not to be emotional. It's not healthy. Don't do it in your relationships. I'm not saying to do it as a doctor. No, of course not. I'm just saying it. Be unemotional when it comes to your investments, and you'll make a lot of money, right? And I feel like it's easy because it's just numbers. You can be unemotional to numbers. They don't have feelings, but don't be unemotional to your wife or kids. That's terrible, right? So it's interesting because it's like a cheat code. Like what I'm showing you right now, when I show you this graph, this is a cheat code to life, right? If you don't think this happened, this is a fluke. Well, look at 2015 when the Federal Reserve started raising interest rates, right? When they said we're going to raise the T-bills, treasuries. I think they started. I forget those days, but you can see that corporate insiders started to buy. 2010, corporate insiders started to, they know their own company, ladies and gentlemen. They know when to start buying, right? This is a cheat code in life, okay? And all you have to do is just learn what poor people do and learn what rich people do. And I'm not saying go talk to your Joe Schmo neighbor who's poor or rich. I'm saying be data driven. And where's the thing? And right here, it's on the opposite side. And look at this. This is your data. Okay, this is your data. Okay. And if you're data driven, you're going to make a freaking killing because I do not want to put the AMC community down. Okay. But I was, when you go to sleep and before you go to sleep, you go on your phone. It's not healthy. I don't recommend it. I do it. Right. So I go on my phone. Right. I go on and I say, you know what? I'm going to go ahead and I'm going to look at the AMC Facebook page. Yeah. And you know what I see? I see someone say, these mother effing hedge funds, they took my shares. I used to have 100 shares. I'm just giving you an example. Now I only have 10 shares. Or I used to have 1,000 shares. Now I have 100, whatever, right? They don't understand what a reverse stock split is. They literally think someone took their shares. Okay. Ladies and gentlemen, these are the type of people you're in competition with. Okay. Do you think so? The top 10% of the richest people in America own 90% of the stock market. Okay. Do you really think the top 10% understand this graph? The answer is no. Wealthy people, I know a lot of wealthy people that don't understand this. Okay. By you understanding this, you understand that you have an edge like no other. You have an effing edge. Okay. So we're going to be creating a book, another book, and it's going to be called like Smart Money versus Dumb Money. And we're going to be basically highlighting key points in history where smart money did this and dumb money did that. And then we're going to go ahead and paint it. And by the time you finish that book and along with all the other books, you guys are going to be in a very good deal. It's going to be good. And then just to be clear, the book that I published, I'm not taking $1 of profit from it. This is homage to Warren Buffett, right? So I'm going to go ahead and donate every effing dollar to charity. Okay. And so again, this is for the benefit of society, because for far too long, middle class has been destroyed, and it's time someone does something about it. Okay. So now that we talked about the pattern, now let's go ahead and just basically dive a little into Clover Health data. Okay. But first, let's go ahead and let's talk about the comments, right? Is this alive now? Absolutely, Michael. This is alive, right? I can see you. I hear you. Okay. I'm just kidding. All right. But I do want people to just hop on the stream, please. It's open. Hop on the stream. Let's have a talk, right? Let's have a nice talk. Let's have a discussion. Let's talk about this data together, right? I think that this will be very good and beneficial for people. Let's jump in. You want to curse me out? Come on in, curse me out. I love to debate. I love debating, right? All right, but let's have a talk, right? Let's have a talk. All right. Let's see here. This is why we're here. Good talk. Good. Unfortunately, some listeners won't get this concept. Exactly. A good example is the difference between ChatGPT 3.5 and ChatGPT 4, right? GPT 3.5 versus 4. People online are like, I can't tell the difference between 3.5 and 4. Well, maybe because their brain is not at a level to understand the differences between 3.5 and 4, because 4 is at a different level, a level where they're not even at. Okay. So what I'm basically trying to say is you can't tell a goldfish to climb a tree. It won't understand. It won't get it. It's just intrinsically, it's not in its DNA. I'm not saying that intelligence is just fully genetic. I'm just saying that, there's some people that just don't get it. And they don't have the tools like reading, tenacity, motivation to basically change their lives. And again, for people that have found me on this channel, that's awesome, right? That is awesome, right? Because, I think in the next 5-10 years, you're going to see what we've been preaching, we've been achieving, right? Okay, it takes years to really understand. Yes, it certainly does take years. It took me a long effing time. I think this is harder than I would say medicine. And then I know that's crazy, but it really is, because it's a psychological attack on the brain. I mean, you really got to do opposite of what your brain says, which is completely different, right? It reminds me of like an ER doctor or a trauma surgeon. Whenever there's a trauma and whenever there's something gory, your instinct is to run away. But these people you have to be trained for this. These people are trained to run towards a problem, obviously because they want to fix it, right? So you have to have a different type of mentality for that. Okay. I don't get it. It's never been a buy. Exactly. It will only disappear in the future. PAG's Brazilian company last week, website, 10 different, 13 June. Hell yeah. Well, yeah, do some analysis. And, for people that are in our stock terminal, you can make YouTube videos on your analysis and put them on the stock terminal and tag me in them, and I'll love to watch them. Do you have a Bloomberg terminal? Yeah. So what we did is we designed a Bloomberg-like terminal. The only issue with my terminal is it doesn't have the GPS tracking of the shipping companies. So like, let's say, for example, you track a ship and the ship is late, you can short that whatever commodity that ship is carrying. The problem is this is satellite technology. I can't afford, that's a lot of money. So I can't afford that in the stock terminal, but I can afford financial data. What's the book's name? Yeah, the book's name is The Intelligent Investor. It's a long title. So the main title is The Intelligent Investor, and the subtitle is For the Modern Reader, based off of the master, Benjamin Graham, the Oracle of Omaha, Warren Buffett. I think if you type in Albert Allen, The Intelligent Investor, I think that it should pop up on Amazon. But again, it's going to show out of stock right now because they're refilling the stock right now for the whatchamacallit, all the book selling companies. Yeah, so let me just kind of, we have the question. We can go here. So if we go to Amazon.com really quickly, and if you type in The Intelligent Investor, really quickly, if you type in Intelligent Investor and then my name, Albert Allen, what you'll do is you'll immediately find the first book here. You'll find it. And then here it is. The only issue is it's the hardcover is unavailable, but hey, wait a minute. It looks like the paperback now is available and it's 2 days shipping. So you'll get it within Sunday, which is amazing. That's what I like to see. Paperback's going to be $14.99. Hardcover is going to be $19.99. I'm not trying to upsell you. I recommend the hardcover because it's going to be more quality. Again, all dollars are going to be donated to charity. But right now, don't buy it now. Let me see it because this is a new book. Let me buy it and let me see how it looks like. And then to see if it looks good so that I can tell them, hey, there's a problem. Can you fix it? I think it's good. They assured me it's good. But again, I'm a little bit of an anal guy, OCD. So don't buy it right now. I'm just letting you know I made the book, right? Let me just see it. Let me see if it meets my quality inspection. Okay. I'm just really excited. I just want to share with you guys because, I'm excited, right? I want to share with you guys, right? You guys are like my family. I like, talk to you guys about this stuff. All right. So now let's go ahead and really go through the comments. This is a good idea. You should also do it with AMC Bulls. Honestly, let's bring them on the channel. I would love to talk to them. This is off topic. Tomorrow, my wife, endoscopy. Oh, dude, good. It's fine. It's good. I've done a lot of them. It's a fast procedure, very fast, and that's the problem with our healthcare system, paying this much money. I'm really sorry. Sadly, in medical school, they don't teach us about the prices. All I know is $1,500 on your health. It's priceless, but it just sucks that there's a price to it. But we live in a capitalism society. What's up, brother? It's been great seeing you back so often since you finished your research projects. Your analysis and insights are better than so many out there. I really appreciate it, man. I really do. I appreciate it. All right, so now we're going to pause on the comments, and then I'm going to get back to the comments. I just want to go ahead and show you the rest of the analysis here. So let's turn to Clover. So what are we looking at here? There's a lot of information here, but all I want you to do is I just want you to focus on the yellow and the green. I lie one bit. I also want to focus here. Just the years, 2019, 2020, 2021, 2022. That's it. Just the years. I didn't highlight them, okay? What I want, and again, this is not looking at 2023 because we're still in the fiscal year of 2023 in the trailing 12 months, and it's only gotten better. So I'm giving you good news now. All I'm telling you is the news got even better than what I'm showing you on this graph. Okay. So what am I showing you? Well, gross profit, EBITDA, operating income, net income, EPS growth, EPS diluted. Again, this is all like kind of profitability metrics. You can see that we were doing really good in 2020. We were in the positive region, 63%, 63%, 49%, 559%. And everyone was like, Jim Cramer is like, I like the stock. I like it. Bank of America, $19. They were giving out price targets up and right to the upper 20s. But then what happened? They started focusing heavily on growth, and then everything went down because they started burning cash, right? Because again, that was what the market was rewarding at the time. Then it squeezed, it went ahead into the squeeze, and then all of a sudden, this price targets started to fall. They started to short the stock. A lot of retail investors, because remember, retail investors don't give a crap about a healthcare company. Healthcare companies are so freaking boring, right? But all of a sudden, retail investors started buying the float and buying everything. They're like, frick, man, these mother effers are not hanging on. Let's shake them off. Some of them they crashed, they let go, right? They sold. And some of them, the ones that are still here watching this video, congratulations. It's hard, isn't it? I bet you looked at yourself in the mirror and you said, am I doing this? Am I doing the right thing here? Am I fucking myself over? Is this a mistake? I mean, I certainly thought that way. Even with all my due diligence. It's common nature. This is, right? Whoever tells you no is lying. Right? But you got to do your due diligence. This is why I don't post a lot of videos about stocks. I just don't have enough time to share with you all the due diligence I do. It's a lot of work. I can teach you how to do due diligence so you can do it on yourselves, right? But to just make videos on countless number of stocks, I feel like for me to research a stock, it takes, about 25, 50 to 100 hours. You know what I mean? This is not easy. It's not easy, guys. Shit takes time. Okay. So now what you see here in 2022 is, look at this. We're starting to get to a point where we're starting to be reflective of what happened in 2020. We're finally in the positive region now. We're starting to become profitable. Look at that. We're going near that. The same thing here. Free cash flow was doing really good. Then negative 12,000. Man, they got hit hard. And then now look, it's getting better. It's getting better. If you were buying here, then I don't know what the hell you're thinking not to buy here, right? Same thing here with net income growth. You can see it. I mean, this is like these. I'm not making these numbers up. I didn't pull these numbers and roll the dice and say, let me add a 6 and a 3. You know what? Let me put a 69. That'd have been better, right? You can see here, the numbers are getting better. Okay. All right. Is this book for psychology for long-term investing? So now that I explained this, let me go back to some comments. So for the book that I published, it's this book. Yes, it does teach about the psychology of. There is chapters in here regarding, like, I think it's chapter 3, the history and levels of the stock prices. It is in here. It is in here. But what I want to do is I want to make a book that goes into specific detail examples that are contemporary of our time and really get into it. But it does have it. This book is recommended by Warren Buffett, hence why his picture is on here. This was his mentor when he was young. This book has created multiple millionaires and billionaires. It's the true fact. Dr. Michael Burry, The Big Short, all of them. They all, Charles Munger, everyone has read this book. What I did is I just made it for the modern reader. The language in 1949 was quite different than the language that we are speaking in today's terms. And it's just easier to digest, right? Okay. So there it is. And again, I set the prices because, obviously there's a cost for me to make the book because it's not free. So there's a little profit. I think the profit's $5 on each book, and each $5, I think $4 or $5 a profit of each book. And the $5 to $4 of profit will be given to charity. So let's say if we sell 500 books, there would be $2,000, which is not, no offense, I'm not trying to be like that's not a lot of money. but that $2,000 means a lot for a charity. That's $2,000 effing dollars, especially in another country that, $20 is like a month's work, right? So worth of work. So yeah, just wanted to get things very clear, because I know there's people on YouTube that like to grift off of their subscribers and that like to just make money off of them. Again, that's not the point of me being here, right? This is a book to help, and it's I use my energy to curate it, and it's going to help you. And then that $5 profit is going to help someone else, and hopefully that person grows up, whatever charity we help, to help others, and hopefully the ripple and the candle of light and energy does not stop, right? That's the goal. Okay. So now that we talked about the financial growth, now let's go ahead and let's turn to some lessons. Okay. Let's turn to some lessons. So I posted this yesterday on our stock terminal. Okay. I talked about 4 different phases. I talked about the distribution phase, the declining phase, the accumulation phase, and the advancing phase. So we're going to talk about each and every phase right now. And I'm sorry to beat this like a bush. I'm sorry to go ahead. But again, if you want to join the channel right now and talk to me, there's the link. Put the link on the URL. Click it and talk with me. Let's have a discussion. I don't bite. I'm a nice guy. Please tell me if I'm a hard person to talk to or a hard person to approach. I'm a teddy bear. But if I'm giving vibes that like I'm like an asshole, or I'm coming off as intimidating, let me know, man. I always want to get better. But if you guys come on, let's have a talk, right? Don't be scared, right? Let's have a talk. I don't bite. All right, so let's go ahead and let's go to the accumulation phase here, okay? Let's start here. Okay. So accumulation, I'm just going to read it. So there's people that are listening. They don't actually read. They can see, they just listen to it sometimes. So accumulation, this is the phase where savvy investors and institutions start buying the stock after a period of negative sentiment or decline. The price seems to have found a bottom and moved sideways. During this period, institutions and hedge funds often accumulate shares without causing a significant price spike. Sounds familiar? The reason being, they identify the stock's intrinsic value as higher than its current market price. Again, this is going to be part of the chapter in the Mastering Stock Market course on the technical analysis perspective. But so this is where we are right now, the accumulation phase, right? Think of it this way. This looks like price action. I want you to replace it with one line called this 200-day simple moving average. Right now, the 200-day moving average is flat, or it's getting to be flat. You don't believe me? Look at here. Now, let's see how it's flat. We want it to continue to getting flat for a while, all right? Not forever, for a while. We do this accumulation phase where we're basically going to move around here for a while, just like what I'm talking about here. And then after a certain amount of time, we go to the advancing phase, which is the next step. Following accumulation, the stock starts its upward trajectory. The positive sentiment around the stock grows as it continues to post gains. More and more traders and investors jump on board, driving the price up further. The 200-day moving average starts to ascend, indicating a bullish trend. And then all of a sudden, you start getting to the distribution phase. What is that? After a significant uptrend, there is a period where those who accumulated the stock early, like us, people that accumulated early, and sadly, often institutions, not retail investors, because we already talked about how retail investors tend to, think the stock market's falling when others are buying, like institutions. But we are not like that, because we are data-driven people, because we like to democratize financial information and bring Wall Street to Main Street. Once we're at the people that accumulated the stock early in the distribution phase, they start selling and distribute their holdings. The stock price begins to move sideways again, similar to the accumulation phase, but this time with a bearish undertone. This phase is often characterized by increased volatility as there's tussle between buyers and sellers. And this is where you get your no, bro, it's gonna go to the moon, bro. Buy the dip, bro. What else do they say? Warren Buffett, man, be fearful when others are greedy when the stock, is not doing anything, right? Right. And then all of a sudden, we get to the declining part when the price goes under its overvaluation to refix its intrinsic value. What is declining? Post-distribution, the stock starts to fall. This decline can be triggered via various factors, including changes in the company's fundamentals, macroeconomic factors, inflation, and or simply the realization among the broader market participants that the stock is overvalued. The 200-day moving average might start to point downward, signaling a potential bearish phase. Okay, you can go ahead and read this here. My voice is getting a little raspy here, right? But you can see here, guys, you can see here. This is a pattern. This is a pattern, okay? This is a pattern. Patterns repeat, okay? This is not rocket science. These are lines going literally nowhere down, nowhere and up. Very simple to comprehend. The issue about the stock market is not that you're a genius. You don't have to be a genius. Trust me. I'm not even using any of my brain cylinders to learn this information. The hardest part for me is to stomach the bullshit of the stock drop. It's to stomach the bullshit of the media saying, the stock market, this stock is terrible. It's to stomach that I'm the only one in the world covering Clover Health. It's to stomach the fact that I'm the only one who set the highest price target in the world. That's the hard part. It's the stomach that I go online trying to look for due diligence, and I'm like, dude, I'm the only due diligence that exists in this stock. No one's talking about this stock. If they are, it's a bunch of bullshit lines and fairy tale tea-leaved imaginations that changed from last week's perspective, and it's short term in a week and 2 weeks versus long term. That's the hard part about the stock, is that there's no information out there. The only information you have is the numbers and wisdom from Benjamin Graham and from the legendary investors of the past to help you. Okay? That's the hardest part. Okay. So now let's go ahead and let's go to here, and we got the Discord, and now let's go ahead to, again, we've shown this before. These are hedge funds. Ken Griffin sold out at when the price was declining, the accumulation phase, the distribution phase, if you have it. Then all of a sudden now we're in this accumulation phase, and you can start seeing 1 million, 3 million. He purchased so many. He has about 5.35 million shares, increased his position recently by 185%. You look at Renaissance Technologies, Jim Simmons in the accumulation phase. Man, this guy's gobbling up shares like whatever. Listen, I understand. I'm some random guy from the internet. Don't believe what I say. Question everything I do, right? But are you seeing what I'm seeing from this video? And if you just started watching, please watch the beginning. This is not a thing where, there's garbage in the beginning. There is important pieces of information in every minute of the video. I'm just giving you facts. Does this make sense? Am I psychotic? Am I delusional? Am I just making things up? Right? The proof is in the pudding. But it's just, but you want to, it's almost like the media wants you to think that way, right? Recently, we started to see a shift and change in Clover Health sentiment. The media is starting to become a little nicer, right? I can't wait to see in the next 2 to 3 SEC 13F cycles in the next 9 months to 2 years how many hedge funds picked up shares. Think of it this way. The more shares they pick up, the more shares they kind of distribute out of the market. And the more higher the price is going to go. And then it's just going to be retail investors pushing up the price, right? I remember before I go into bed, I was scrolling down AMC, and I also saw someone say, damn, man, the stock price is $12. Wasn't it $1 a week ago? Holy crap, man, we're up. And there's another comment. It was like, yeah, bro, keep buying, man. Buy it. It's going to go higher. You see the manipulation there? You can't even trust your own retail buddies. Again, guys, you are in competition when you're buying a company. Like, for example, I'll give an example. Pretend you're at a car dealership or an auction and you want to buy something. Guys, you're in competition with everyone around you. I mean, if you want to break it down to its intrinsic, core, you guys are in competition with me, right? It just so happens that I'm sharing with you guys this because I want my life to mean something more than just money. I want my life to mean more than just creating wealth for myself. It'll be nice. I see the extent of just doing that and making people wonder how you did it. But isn't it nice to bring people with you? I'm trying to build a legacy, right? So, it's you got to be careful with what you read online. I despise people that try to troll and try to give false narratives to people that are uneducated in the market. And there's a lot of people out there that do that. And I don't like those types of people. Those peoples are not good peoples, right? Okay. Hey, didn't get notification that you went live. That's interesting. You're the second person that says that. I'm sorry, man. I'm sorry. Yeah, that's BS. I'm sorry. Yeah, it's YouTube's fault. And this video is pretty good. I put some work here. So now let's talk about book value, right? Book value. What the hell is book value? Well, we talked about book value in a couple of videos ago, and I just wanted to reiterate this price. Okay, so as the stock kept falling down, the green is the stock. Let me hide this. Green is the share price, right? And the share price has been crashing, and also the book value has been going down. But the book value has hovered around 70 cents. Okay. Now, what is book value? Well, book value is if I was to take Clover and put it to bankruptcy court and say, hey, Clover, you're bankrupt. I'm going to liquidate your ass. That means every shareholder should get around 60, 70 cents. So you're telling me that Clover, that has $600 million around in the bank account, is being sold at a $400 million evaluation. So I'll give you an example. It's like I'm buying $1 for 50 cents. Well, you bet your doggone balls I'm going to buy freaking $1 for 50 freaking cents. Of course I'm going to do that. And guess what? It's not like I'm buying $1 for 50 cents. I'm buying a business that can potentially make me even more money for 50 cents that eventually could be 15 to 20 bucks a share, even more. So the point here, and let's go on to the next slide, is if we were to analyze this and just simply look at the book value here from 2022 to trailing 12 months, it goes from 75 cents to 69 cents. You take the average and it's 72 cents. Well, would you looky, the 52-week low is 71 cents. So for the individual people that said, you know what, Al, the book value is around 71 cents. I'm going to go ahead and I'm going to go balls deep into this price. Well, congratulations. You just went up 113%. 113%. That is the power of math. That is the power of math, ladies and gentlemen. Okay? That's the power of math. So where do we go from here? What to expect in September? Well, I have an answer for you. So if we go to this next graph here, this is the seasonality of the S&P 500 over 100 years of data. But guess what? We're not talking months. We already know September is a bad month, but look at this. This actually breaks it down in days. What? You're telling me the first day of September is positive? Well, was Clover green to you today? Certainly was. So people use this to help guide them, and hedge funds have all this data, and I'm just giving you a little fraction of the data. But take a screenshot. This might come into fruition, this may not, but it just cares to show you there's a lot of red days here, especially more towards the end of the month. Now, again, this could have been pre-priced in August because maybe hedge funds are starting to say, hey, Al Stock Trades and a bunch of other assholes are starting to basically educate the public and retail investors about this trend. And maybe it may not become a trend anymore, right? But again, ladies and gentlemen, the goal, again, for the people that stayed this long watching this video, I just want to basically thank you for supporting our channel. And I also want to basically admire your tenacity and willingness to learn. I mean, it's just so inspiring. It's what pushes me to keep going. It's what pushes me to be better, to seeing all you guys. It reminds me of myself when I was extremely hungry for the stock market. It reminds me. It's almost like, think of it this way. When I was first starting out, it was like Rocky Balboa, the first and the second movie. It was like that. I had the eye of the tiger, right? And then all of a sudden, I start to get all these awards and accolades and all this bullshit, and I became soft. I got a nice girlfriend, and she's like, calm me down, right? I want a family. I got dogs. I used to be so hungry. I lost that spark. Just like Rocky Balboa 3. I started to delegate. I used to do everything on my own. I started to delegate things. And I was like, damn, man, I started looking at the clouds and mountains. And I started to live, I guess, right? And it's like Rocky Balboa 3, where he lost that eye of the tiger and he got destroyed. And then Creed had to go ahead and teach him where he came from. He got it back and he won. The point is, seeing you guys hungry to learn is just very inspiring. And it also makes me look down at universities on how much they've increased their tuition to where I have all these amazing students trying to learn. And here at my university, born in 1885, longer than the Mayo Clinic, believe it or not. So expensive tuition, so expensive. And even then, they don't even teach this stuff. So I'm going to go ahead and, be my own university and be able to teach people. And we're going to write books, educate, stimulate, and inspire, and build a legacy to help people. And if we can help a couple middle-class people become rich, and a couple of people that are poor become middle-class and hopefully rich, then I think we did a job well done in this lifetime that we were given. In 80 years, 100 years? I mean, the first 10 years you're trying to learn, 20 years, first 10 years after that, you're trying to figure out your body. And, so, not too shabby, not too shabby. Okay. So, should I, okay. Good question. Should I buy the deep at this price? A dip, I think. So again, Matt, my job is not to tell you when to buy or sell, right? I'm just giving you a way to look at look at something. I want you to do the due diligence, right? I know this is going to be like a cheesy argument. I want you to do the work. I'm just showing you how I look at things. Right? I want you to be, because again, if you're going to copy, I want you to do it. I want you to be the captain of your ship. This is your portfolio. You are the CEO. You are the pilot. Okay. I'm just showing you a couple of instruments that you can add on to your flight to take a look at and consider, right? Like add a GPS here, right? Right. Didn't get, sorry about that. I always forget this. Yes, please hit the like button if you can. I really appreciate it for people that have already done so. It really means a lot. Every like button I get is every lap extra I do in the pool. I'm just kidding, but I'm going to probably do that today. So we'll see. You got civilized. Who, me? Maybe. I think I did. I honestly got civilized. I was just a ruthless guy. I was I was hungry. Then I guess I got civilized. I started to enjoy the world. I started to pay attention to what other people were saying. I got civilized. I think that's true. That's a true statement. Very true. I really appreciate you showing us all of this back end information. Yeah. It's a shame that, but again, this is what life is about. I mean, think about it. Do you think back in the day, you think with our dial-up internet connection speeds, beep, 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 you think we had the power to talk to you like this? I mean, shame on all of you guys. I give you a link to come on and talk with me, right? We have the power to communicate. You know how powerful that is? We have the power to just talk and argue and insult and criticize our ideas, but not our character, right? That's the beautiful part about America. I want to not insult, but I say it nasty. Like I want to kill your idea or listen to it, right? But again, I don't want to, hurt you. I love debating, right? And I love that about America. We can debate each other's ideas, take our ideas, chop it up like an onion, burn it, but we're still okay because we didn't hurt each other. But again, we leave that argument or that discussion, debate, whatever we want to call it, with something more, right? I mean, that's my understanding of into an intellectual conversation. Okay. Oh, wait, to your flight. What's a coincidence? I'm catching a flight in 3 hours. You know what? I'm very excited. I actually used some points. I got a really good discount on my flight. I got really excited. American Airlines, baby. I got really excited and very, very excited with my flight seat. It was very good. I always like to save money. Let's see. Rocky. Yeah, that line was from Rocky where Mickey said it to Rocky. Exactly. Yeah. You just lost, your eye of the tiger. You lost it. And I did lose it. But now you guys are helping me get it back. But this time I'm getting it in a way from a humble perspective, not from I'm an animal trying to climb my way to the top. I think I've done a good job. I'm going to become a doctor. I'm going to be in the top 1%. I'm going to be, God willing, become a brain surgeon, but now God has given me the gift to be in the top 1%. Now it's my time to bring as many people as I can to this beautiful thing called the American dream. Okay. Where am I going? So I'll be going to Washington, D.C. I'll be presenting at Howard University, 5 oral presentations, about 30 minutes each, which I kind of prepped for. I'm going to prep for it this weekend. Yeah. So 30 times 5, it's about 2.5 hours of talking. Lord have mercy. And then I'm going to present on Tuesday at the Congress of Neurological Surgeons in some pavilion plaza they have up in DC. Maybe Michelle can record it, or I don't know, maybe somebody can record it or something. I don't know. I'll see if it's possible. But yeah. But yeah, guys, very excited. And also I'm so excited on this new book. Don't buy it yet. Let me buy it first. Give me about 2 weeks. Let me kind of do my quality inspection. And once it passes my quality inspection, because again, I want you to have a very sexy book. I spent a lot. I spent like 2 years on this book, right? I spent a lot of time on this book. I want to make sure it's going to look good for you guys. Yeah, and it's just feels good. It feels good. And again, thank you to the Berkshire Hathaway team. I really appreciate, and thank you to Dr. Michael Burry for being a good mentor and all the books he gave me. I really appreciate that. The Big Short. I really appreciate everyone's support on wanting to help me with this mission to help retail investors thrive. I couldn't ask for a better life. I really couldn't ask. I have the best life in the world. I couldn't ask for a better life, right? So I love each and every one of you guys. I want to see here if I'm missing anything. I got everything. Yep, that's it. Again, I have to ask. I'm going to ask one more time. Here's the link. Does anyone have a question? Does anyone want to talk? Last one. I'm going to give you 15 seconds. You know, I definitely will. I'm gonna see if I can. Usually in settings like this, it's tough, but I'm gonna see if Michelle can do it. The audio may not be good, but yeah. All right. Well, I guess nobody wants to talk. Yeah. No. Hopefully, maybe next time you can talk. And I get it. Maybe sometimes you don't have to show your face. You could just show your voice. I guess one question here. Where do you see Clover 2025? Sorry, something popped up in my window here. Make sure. Yeah, for 2025. Well, I see them. I can only speak fundamentally. I think 2024, we're going to start seeing really positive strides to profitability, free cash flow. And I think by 2025, I think we're going to start seeing a lot of price increases in terms of price target analyst. And if I were to say, it being kind of, let's put it this way. I would be surprised if the stock was not over $3.50 to $4. I would be very surprised. $4 over $5 over $6. I would be very surprised if it was not that high. I would be very surprised. I'll be like, oh wow, okay, that's weird, but chances are it's gonna go above that before then. But again, we'll see. Again, it's like a farm, right? It's like a farm, right? Yeah. All right. Well, hell yeah, man. Let's see here. I think so too. Yeah. I love each and every one of you guys. Definitely thank you for all the people that liked, subscribed, and share this video. This was a lot of due diligence. It's been a while since we made a video, so I wanted to basically conglomerate everything. And sometimes we might have to repeat things a little bit to reiterate the point. But wait a minute. I see someone here. They will need to connect their mic before you add them to the stream. Looks like someone is trying to connect. His name is Yum. Yum, I see you. It just says you need to connect. Now you've disappeared. Are you here? Here's the link, Yum. Let's wait a little bit. Yeah, I'm going to have to talk to YouTube. Can you email them? It's better to come from it's better to come from a subscriber. They listen to subscribers better than content creators. But I'll email them and then you email them, so it comes from a top to bottom approach. But yeah, man, come on, Yum. Come on. Come, Yum. Come, Yum. Let's see here. In fact, I'm going to go get some water, and then before I get some water, let me give this guy a kiss. Come and give me a kiss. Oh, you just burped. Are you okay? That was not hot. Are you okay there? You okay there, son? You okay there? I love you. I love you. Oh, come on. Give me a kiss. Come on. You see how he turns his head? He's like, who'd you learn that from, huh? Who'd you learn that from, huh? You're a kisser, huh? Who's a kisser, huh? Who's the most cutest dog in the world? Oh, I gotta brush your teeth again today. We gotta brush your teeth again. You good? All right. Well, hey, I guess Yum had some technical difficulties. No worries, Yum. We will talk again in the next video. I'm gonna go take this beautiful dog for a walk. And I agree, he's the most chill. He's so chill. He is so chill. If we can all act like a dog and have the loyalty of a dog, do you think Russia would have invaded into Ukraine? You think America would push NATO in Russia's territory? You think China would want to invade into Taiwan? You think United States would have had a false war in Iraq? I swear, yum didn't come. Honestly, the world would be a better place if we had the loyalty of that of a dog, right? I love this. This is my boy. This is my boy. I got so lucky to adopt him. I'm so freaking lucky. I'm so freaking lucky. I mean, freaking for £1 to have a dog like that. Come on now. I got lucky. All right. Yeah, world would be a better place if Yum can come. All right, Mr. Yum. I'll see you on the next one. And hopefully next time you can come. We all want you to come, Mr. Yum. Yep, I certainly did. He actually chose me. He looked at me. He's like, I want you. I'm like, yeah, me too, buddy. Let's go. All right, guys. This time for real. I'll see you on the next one.